Okay, we have our first featured speaker. Pardon me, I'm tripping on my words here. It's already been a bit of a long day and we still have a few hours to go. It's our first featured speaker, and it's going to be Stephen Flood, who is CEO of GoldCore. He's going to virtually sit down with our very own Alicia Hyatt. So I will introduce Alicia, who will in turn introduce Stephen. Now, Alicia is currently the editor-in-chief for Canadian Mining Journal, but I'm happy to announce, and you'll see it in the upcoming edition of the Northern Miner, that she will be taking over for the retired and fantastic Trish Saywell. We will have to bid Trish adieu. She has had an incredible tenure, but Alicia is going to be stepping into the role of editor-in-chief for the Northern Miner. So we're excited to have her step into that. Now, her current role as CMJ editor, CMJ Canadian Mining Journal is one of Canada's oldest mining publication. Alicia has nearly 15 years of experience as a mining journalist, covering projects and mines, new technology, environmental and social issues related to mining. She's also editor of Diamonds in Canada. And Alicia, welcome back to the Global Mining Symposium. It's always a joy to listen to you moderate one of our one of our fireside chats. How are you doing today?
I'm great, Anthony. Thank you so much. And I have to say, this morning you had I don't know if it was planned, but you had such a great array of commodities exposure with the juniors that were presenting. So
yeah, you're right. That did work out nicely, because oftentimes what we'll do is there'll just be a lot of gold, right? Or a lot of copper. But this was nice. We're kind of moving through all the key ones. We have uranium coming later today, so it keeps on coming. So yes, thanks for making note of that. I will pass it over to you, and I'll let you introduce Stephen.
Great. Thank you so much, Anthony. It is my pleasure to introduce Stephen Flood. Stephen is the CEO of GoldCore, one of the oldest gold and silver dealers in the market today. Stephen received his degree at Portobello Business College in Dublin, Ireland, before beginning his career in finance. During his career, Stephen has held financial and trading positions in various firms in New York City, including with Goldman Sachs as a sales trader in equity derivatives. When he returned to Ireland about 20 years ago, he put his experience in trading, risk, and financial markets to good use by starting a financial services firm advising clients on gold and silver purchasing and storage. Established in 2003, GoldCore has turned over $1 billion in transactions and manages $300 million in assets for its clients. Welcome, Stephen, and thank you so much for joining us from Ireland.
It's great to be here. Thank you so much for having me on.
So there's a lot to talk about with gold right now, Stephen, and different factors that are influencing demand for gold and, of course, the gold price. But before we get into that, I wanted to find out a little bit more about you. So you had a career on Wall Street as a trader, including in derivatives, before starting a business based on physical gold and silver. So can you just tell us a little bit about that journey and what got you interested in gold?
Yeah, I suppose my first contact with gold happened when I was 11 years old. My father sadly passed away, and I received two things when he died. One was about 10 gold sovereign coins, which were put in my hand. And the other was an old double-barreled shotgun from my great-grandfather, so a family heirloom. And I was only 11, so I didn't know what to do with these things, but they always stuck in the back of my mind, in particular the gold. And many times, as a teenager and in my 20s and different things, and you might have a financial crisis, you need to find money fast. I thought about selling the gold, but I never did. I held on to those coins, and I always had by having them, I had a little piece of my father and also his father as well, because they'd been given to him by his father. So, but after I'd spent 7 years in New York, and I'd returned to my hometown of Dublin, I joined my old school friend Mark O'Byrne, who had just started GoldCore up, and I had a lot of experience in financial technology, and I was quite excited about starting a business. And myself and Mark set out to allow people to own gold as safely as possible. And the backdrop really, the inspiration came from Mark, in that he was a school of history knew all about financial history and knew about fiat currencies and how they get abused over time and how the poor people in society end up paying, picking up the bill. And he knew that gold was something that people needed to have to give them security, but nobody was providing it. It had fallen out of favor. Gold was languishing at $250 an ounce for many, many years. But he saw that there was definitely an opportunity there. So we basically created the business, and we figured out how to provide gold cheaply and for good value, and how to store it safely as well. And we grew it from there. Mark actually left the firm last year to pursue other interests, and left me in charge. So we have a team here now at GoldCore, which are absolutely second to none. There's about 13 of us in the company, and we have about 9,500 customers, and we offer storage in 11 vaults. And I think the big difference between us and others is that our default storage product is segregated, allocated, which means it's on the shelf, serial numbered, and it's separated from everyone else's gold, and it's not on our balance sheet. It's not on the vaulting company's balance sheet. It's just safely stored for the client.
So we're at, let's talk about gold. Gold is having a moment, or maybe it's about to have a much bigger moment. There are some,
looks like it today.
There are definitely some factors that are bullish for gold right now. On the bullish side, we have geopolitical risk, of course, with the Russia-Ukraine situation. We have equity markets that until recently had been at historic highs. We have high debt levels, we have high inflation. But on the bearish side for gold, we do have interest rate hikes coming on the way as soon as next month. So where do precious metals fit into this picture?
Yeah, I mean, if you look at the kind of the heartbeat of the market, when things are normal, and you're within what's called one standard deviation of normal parameters, gold kind of sits on the sidelines. It just tends to track inflation. It does nothing too exciting. It's not the core part of a portfolio. But in the vein of financial insurance, which is really its purpose, it becomes negatively correlated to traditional assets, investment assets. And the reason for that is it's basically gold is valuable not for what it is, but what it isn't. It's not plugged into the global economy. Its value is not derived from that future flow of cash dividends or that drive the value of almost all other assets. It has no investment function in the traditional sense. It's inanimate. It just sits there. So because it's disconnected, it becomes really valuable when being disconnected is something that investors want to be. So what's called risk off. So when you go out of the equity markets, you go out of the bond markets, and you want to try and protect your capital, not get a return on it, but return of your capital, gold really comes into its own. That's happening right now for a whole lot of reasons. Interest rates, if they start going positive, it hurts gold when the markets are quite sanguine. But gold doesn't give a darn about interest rates at the moment. Gold has been sought after by investors seeking to protect their investments. And so it doesn't matter what interest rates do in this particular market environment. Really, gold will find a bidder because of what it isn't, as opposed to what it is.
So what kind of interest are you seeing right now at GoldCore?
Oh, it's incredible. Yeah, I mean, like, as I say, we have about 9,500 customers, over 100 countries around the world, primarily in Europe, in Ireland, and the UK. But we're incredibly busy. We're out the door. There's a record amount of accounts opening up at the moment. A lot of clients are buying physical for storage in safe haven locations, and I think the idea of the proxy gold, which is the ETF, is less attractive when systemic risk is of particular importance. So we don't know what's going to happen with a global financial marketplace when interest rates do start to rise up, and then the amount of debt, the debt burden, becomes very, very real for economies like the United States, and its debt burden and its ability to service its debts with higher interest rates really calls into question their tax base, their capacity to do that. Who wants to buy a bond of a government who's using that bond to pay the interest on existing debt? So it's it's a very, very kind of scary situation, I think. And we're seeing quite a lot of social problems, economic problems, monetary problems. It's kind of the perfect storm, really, for something like gold. And that's why, many people actually don't own gold. And I think probably the big story for gold isn't necessarily its price rise, which I do think it's going to go up a lot. It's likely the number of people who move into the market for the first time. Most people never buy gold, and they don't buy silver. It's very much a fringe investment asset. Most people haven't seen inflation in their lifetime. Anybody under 35 has never experienced inflation. They don't even know what it is. They don't know how it erodes your buying power and affects your savings.
That is interesting that you raised that that point that most people aren't invested in gold. I wanted to ask you specifically about younger investors who are enamored with cryptocurrencies. Do you see them getting interested in gold in the next little while here? Or are they already?
Absolutely. Yeah, well, no, I think there's quite a lot of people. I mean, in the last few months, the story of crypto has just shifted a lot, because the whole idea of safe haven gold, digital gold, it's a hedge, it's non-correlated, has just been thrown out. Most of us could have been saying that for a long time. This is a speculative bet on in a marketplace where there's yield starvation happening everywhere. So the average balanced portfolio with 40% bonds is yielding negative returns. So when that happens, people start throwing money at anything that moves, anything that's shiny. So crypto has grabbed a lot of that attention, but it's very much an empty promise. They don't really understand what they're getting into, and they're chasing price, which is classic end of cycle kind of activity of investors. They have to learn the lessons of every previous generation, and they will learn it. And that's just going to happen. Things are cyclical, but we are seeing a lot of people going into gold, probably older, and I do think younger to come. They will buy gold. We have a really popular product called a Gold Saver, which is like a monthly accumulator plan. You can sign up in 3 minutes, and you can put like $100, $200 into gold, and it's physical. It's a physically backed gold. Yeah, so that's quite popular. We're getting a lot of people opening up accounts in that right now. It's very affordable.
So some analysts have speculated that cryptocurrencies will compete with gold as a store of value, and some enthusiasts have even dubbed Bitcoin gold 2.0. You don't obviously agree with that.
Not at all. What is it? Is it a currency? No, it doesn't actually get transacted. You don't buy anything with it. No one ever does. People hold on to it. Like you've heard this acronym HODLer, or hodler, whatever you want to call it. Like, hang on for dear life, it means. So it means they're almost puritanical about it. It's a cult-like situation. The key, though, Bitcoin is a really interesting thought experiment when it comes to the application of blockchain technology. Now, that is something that's really cool. Blockchain technology, mathematical ledger that's immutable, will absolutely change the fabric of every economic particle in our lives. Everything will change with blockchain. It's like a 1 in 1,000 year technology. And I really look forward to seeing how it's going to transform the mining industry and empower everyone through the value chain with much better data that can't be lied about, or it can be trusted. It's going to disintermediate an awful lot of advisors and banks and lawyers and auditors, because information will be known and true. And I think every industry is up for massive disruption with blockchain, and that's really the one to watch. And it's going to deliver huge value all the way through our economy.
So speaking of blockchain, there are quite a few blockchain initiatives happening in the mining sector, with the goal of tracing materials from the mine through the supply chain to the end customer, and providing information about the origin of the mine material and the conditions under which it was produced. So whether that's water intensity or greenhouse gases associated with its production, or other things. So is this possible with gold yet? Are gold dealers such as GoldCore at that point yet where you can offer that? Or is that coming?
Yeah, well, we're moving towards it. I mean, but the thing is, it's to be really effective, it has to be an industry drive. The industry needs to come up with the standards and apply the technology. And I don't think it's in the industry's interest to do so with a single player who has proprietary ownership of that platform or that protocol, because then you're going to disintermediate yourselves. You don't want to empower someone to that degree, but industry organizations have an huge opportunity to create the standards that will increase the flow of transactions and the speed of transactions and reduce latency, reduce friction, and increase efficiency, and therefore value to the end customer. And that's really what you want, is dynamic, straight through processing type systems. And the gold industry, absolutely. I've worked really closely with a few players. I've written a white paper on it myself in the past. I'm really excited about it. GoldCore is going to definitely delve into this area. I'm already working on designing a protocol. What's really interesting about the way we store, because we started with segregated allocated, we actually built a ledger inside our system, our technology, that actually has a lot of dynamic data automatically there. So we can show a kilo bar that was brought into our storage 10 years ago. We can show everyone who bought it and owned it, everyone who delivered it, everyone who stored it, everyone who insured it. And it means that in the future, we'll be able to show that, that rich metadata for any prospective buyer for that particular kilo bar, which is incredibly empowering for everybody.
Excellent. Alicia, we are up against the clock. Stephen, thank you so much. We do have one question from the audience. Alicia, are you able to see that, or would you like me to read it?
I can see it, yes. If cryptocurrency adopts efficient and renewable energy sources for mining purposes, can it overtake gold as a safe haven in the long term?
No, not at all. Gold is a product of an industrial process which had energy. Gold is almost physical energy manifest. If you think about it, like it actually has an energy profile when it was created. Crypto does not have anything like that. It's actually just ethereal. It's conceptual, really. It doesn't actually have any physical form. So gold's like almost like an energy battery. It'll be more expensive to produce it in the future than it was in the past, arguably in a kind of a post-carbon world. So I don't think the source of energy is particularly important when it comes to crypto. Crypto needs official sanction. Central banks will bring out cryptocurrencies for currency purposes. And I think when that happens, I can't imagine any of these 11,000 cryptocurrencies having anything but, passing it, they're just something to talk about of the past. They'll have no real value.
Excellent. Alicia and Stephen, thank you so much. It was a good conversation that we needed today to break up a little bit of the all the exploration talk and to really think about what gold means in the economy. So thank you, Stephen, for bringing your expertise, and Alicia for your expert questions. Thank you both.
Thank you.
Thanks.
Take care. Bye-bye.